Hello, welcome to the new week, 27th, 31st of January to 2025. As always, I'm Atomashi Dania, Vestrado's global market analyst. So let's take a look at some pairs to trade, how they look, and some possible entry and exit points. As always, we're going to be starting with fundamental analysis. And some of the pairs we're considering include the AUD USD, the USD Swiss, the USD JPY, and the GBP JPY. So for me, the highlight of the week for the AUD USD are the highlights include the Australian Consumer Price Index, CPI, the Federal Funds Rate, the FOMC statement to be released on Wednesday, and the press conference, of course, the US Advanced GDP on Thursday, and the core PCE price index on Friday. Of all these, I highlighted the core PCE price index because it's sort of a yardstick right now because the markets are looking at inflation in the US economy based on the rate cut that the Federal Reserve Bank has ongoing right now. Hence, the core PCE price index is an index, or rather, indication of inflation in the market and how effective the federal funds rates um, are. Okay, how well they're impacting the markets, how the markets are responding very nicely to them. So we're going to go into the charts. That's for the AUD USD. Start with the AUD USD there. Um, Going into the charts, let's see what it tells us. There you go. So we'll start with the monthly charts. Now, on the monthly chart, of course, we can see that we're currently around a support point. The support point last hit last month, so it closed or rather touched 0.6163, and that support point is a significant level last reached in October 2022. Price is currently reacting to it. This is the new week. We can see that we have a bullish candle right now. Of course, the week just started. It could break that level or it could just keep going up. But summary is we have a reaction ongoing right now. And those who were able to capture the reversal movement on this had capitalized on some good profits. Now, on the daily chart, what do we see? Um, we see a nice inverse heads and shoulders pattern here. Head, shoulder, left shoulder, right shoulder. Nice inverse heads and shoulders pattern where we've broken past the first key area here. Price broke past the first key area to hit the second key region of the inverse heads and shoulders pattern of 0.6300 psychological level. So right now it's currently at that location. Let's see what happens on lower time frames if it breaks or if it responds to it and reverses. Now on the 4-hour chart, we see price currently moving along a nice ascending channel, right? Very nice ascending channel. What else do we see? Look, it's currently also moving above the 200-day moving average. Plus, we have a nice cross right here. The 50-day MA has crossed the 100-day, the 50-day being the green line, okay, the light green line here, crossed the 100-day MA, okay, initiating, of course, indicating that the bullish momentum is really, really strong right now, and the bulls are very strongly in the market. Okay, so we have price on the 4-hour chart moving nicely along an ascending channel, still moving within the channel and currently above the 200-day moving average. That's the red line, thick red line we can see right here. It's above the 200-day moving average. But for support and resistance point or in the short term, we also see price on the 1-hour chart. Okay, moving along this channel, the same channel on the 4-hour chart, looking quite expanded on the 1-hour chart. So what do we have? We see a channel with 4 levels or 3 regions. 1, 2, 3. Okay, some will call it the equidistant channel. So what I want to see is trading within the borders of the channel, the resistance border and the support border. So a break of this first key level here okay, which corresponds to significant swing lows here, here, and here, also here. If it breaks this key region, we could see price head to the next key region right here. And a break of this could see price head to the main resistance border of the channel, possibly leading to psychological level of 0.6400. Now, if a break below it occurs, we're looking at a target level of 6256, okay, and 6246. It could break it in the short term before we have a nice movement up. But generally, it looks like the bullish momentum on this guy is quite strong, even though on the monthly chart, price is currently around a major support region. And on the monthly chart, again, we see a nice Marubozu right here, indicating that the bearish pressure is also quite strong. Now, because of the fact that the US dollar is weakening across board on all major currencies. Okay, I prefer the bullish option. So unless I see key breaks, a key break of this major support area on the monthly charts, the Marubozu, even though it tells me that the bearish signal is still quite strong, you can see the Marubozu candle right there in highlight. Even though it tells me that, I'm still going to consider the bullish entry or bullish positions at this point. So back to our 4 hour chart, a 1 hour chart, we see price moving along a nice channel. A break below this could see price head to 6256, and a break further of the 200-day moving average could see price head to 6227, and below that 6207, below that also 6188, and eventually 6175, or a nice support region here of 6164. That's if we have a break below. Possible deviation. So you may also consider these levels for possible deviation, because a break below this could touch these levels before it eventually bounces up going upward. But because of the general outlook on this pair, I am majorly bullish on the AUD USD. Okay, I favor bullish signals more. Take more risks on bullish signal on bullish positions. All right, that's that for the AUD USD. Now let's go over to the USD CHF. What do we see on the USD CHF? First, we're going to start with the fundamental analysis right here. So for the USD CHF, some key notes or key news or events to look out for within the week include the federal funds rate, of course, affecting the US dollar. Okay, the advanced GDP also affecting the US dollar, and then the EU main refinancing rate or the monetary policy statement of the ECB to be released on Thursday. Some may ask why why that? Because like it or not, the EU economy and the Swiss economy are quite linked, very, very linked. So whatever happens in the Eurozone tends to rub off slightly on the Swiss economy. So we want to pay attention to that when trading the USD CHF. Okay, and last but not the least, on the USD Swiss, we also want to look at the core PCE price index for the US dollar economy, for the US economy to be released on Friday. Okay, now over to the charts. What do we see? Typically, um, let's look at, let's start with the daily chart. So on the daily chart, we see a very nice negative divergence right here. Nice negative divergence. So connecting the highs on price, shows us an uptrend, but connecting the highs on the RSI, we see RSI negative divergence. Okay. Also on the daily chart, we see price currently moving along a nice ascending channel. Very nice ascending channel right here. We see the nice cross that has happened between the 50 and 100 and 50 and 200. Okay, that told us that we're in a bullish scenario. But guess what? Something has happened right here. Something happened. Look. So if you look closely, you see that a break of the channel is occurred right around here. There you go. Right around there, we see a break of the channel. Okay, it has happened right here, and price seems to be targeting the 50-day moving average. That's the green line right here. That's 68973 level. Okay, the 8973 level seems to be targeting that on a downtrend. And also this coincides with the general weakness of the US dollar across board that we're experiencing. So what I want to see, because the break of this has happened, I'm majorly bearish on this guy. But what else do we see? Let's look at the 4-hour chart. Beautiful. So on the 4-hour chart, there's a nice heads and shoulders pattern. Head, if you follow the yellow circles, left shoulder and right shoulder. Now, if you look at the first thick horizontal line, that's our first neck. Okay, you can see that neck one right here. Price seems to have broken past it, played around it a bit. Okay, touched neck two here. You can see that neck two right now. So right now, price is currently below the neck, the second neck. That's the thick horizontal line, and is currently around the 200-day moving average. That's the thick red line right there. Coincidentally, it also touched the 23.6 level of our Fibonacci. That's 9012. So what do I want to see? Um, a break of this level. It's broken the second neck. It's touched the 200-day and it's touched the Fibo. It's currently reacting to the Fibo level of 9012. If a break of the Fibo level of 0.9012 occurs, I want to see a drop. I want to go for a sell on price to 0.8975, and scalping positions could be taken advantage of too, 0. Or intraday 8957, and below that 8924, below that 8896. If it eventually heads way beyond that, we're looking at support level of 8854. But on the flip side, of course, we always like to consider the flip side regardless of what happens in price. Okay, on the flip side, if price decides to go up. Let's look at the 1 hour chart. So on the 1 hour chart on the USD CHF, price seems to be moving nicely along a descending channel. Seems to be moving nicely along a descending channel. We can see that the green line right there, moving nicely along the descending channel. It's currently touched the lower border of the descending channel. Okay, so I'll look for reversal patterns on the lower time frame, 30 minutes chart, 15 minutes chart. And if I see that and a break of clear break of 9027 going up, back up, or rather maybe a clear break of 9039 in an uptrend, let's give that a different color. There you go. If I see a break of 9039 going up, okay, I go for the next target level, which could be halfway across the channel. Okay, that'd be my first major main resistance area. All right, a break above 27. If you are adventurous, if you see reversal patterns, you want to see an early entry. If you go for an early entry, you want to target 9039, okay, or the halfway level of the channel. Okay, if it breaks above the halfway level, that's 9050. I want to target 9072. Okay, and above 9072, I'm looking at 9086, which coincides with the main resistance border and the 200-day moving average, which is the thick red line we have right there. Now, above that, a break above that, and 9095 could see price head to 9106, okay, or most likely 9112. Yeah, 9112 will be the level, okay, for scalpers and intraday traders in the house. And above that, 9133, above that, psychological level of 9150. Okay, finally, we can also see that price, see the descending channel on the 4-hour chart here. We see the heads and shoulders on the 4-hour chart, but price, as it moves on the 1-hour chart, you can see there's also a nice visibility on the 4-hour chart. So that's the USD Swiss. Okay, the third pair I want us to look at today is the USD JPY. Let's look at the USD JPY and have a look at the fundamentals on this guy. So what do we have? We have a monetary policy minutes about to be released on Wednesday this week from the Bank of Japan. It's not marked as a high significant event, but of course, if you've been following the JPY pairs, you know that the Bank of Japan, or main stakeholders from the Bank of Japan, especially Governor Ueda, tends to say some very hawkish statements that favor the yen. So on this day, look out for hawkish comments from any main official from the Bank of Japan, especially the governor of the bank. Now, what else to look at? Of course, because of the US dollar here, we're looking at the federal funds rate and the FOMC statement on Wednesday, and the GDP data to be released on Thursday, and finally, the core PCE price index for Friday. And finally, one minor pair that I'm looking at trading too is the GBP JPY. Because of its peculiarities, which I'm going to show you on the chart, we should consider correlations from major pairs like the USD JPY and the GBP USD. So let's take a look at that. Let's go over to the chart and take a look at what is available. There you go. Now, starting from the weekly chart of the USD JPY, we see nice negative divergence right here. Okay, connecting the swing lows on price, we see a nice uptrend. Connecting the same lows on the RSI, we see a nice downtrend. Now, on the same weekly chart, we also see price form a heads and shoulders pattern. Okay, head, shoulder, shoulder. Okay, and it looks as though it's moving along a nice ascending trend line. The price is currently, if you look carefully, you see a nice bearish candle looking to break beyond the range of the ascending trend line, okay, which is the pink line right here. So in the long term, if a clear break occurs, the next most likely level will be the 50-day MA, which is the green line right here, okay, and we see also the blue horizontal line 152.25, and below that, if it breaks that, we're looking at 148.63 in the longer term, of course. Heads and shoulders. Before that, I should say that because of the outlook on the USD Swiss, unless I see key breaks of resistance levels, I'm bearish on USD Swiss. I'm going for bearish positions more. I favor bearish positions more. It doesn't mean I won't trade bullish positions too. For the USD JPY, let's keep going. Yeah, on the daily chart, we also see a nice uptrend connecting the highs on price, but a nice downtrend connecting the RSI, okay, on price, RSI negative divergence, and it looks like price has broken a trend line, the blue line there, a nice trend line. Price broke it, okay, and that also coincides with the break of the 50-day MA. If a clear break of that occurs in the longer term, we're looking at a drop to the next MA level of the 200 MA level in the longer term, of course. Now, in the shorter term, on the 4-hour chart, what do we see? Last week, I talked about this pair being locked within a channel, right? A rectangle. Here we can see it's locked between two key areas in the rectangle. The upper border, that's the pink line, you can see that, and the lower border, the next pink line we can see here. So it's been moving and oscillating between these levels, broke the first key area here and touched another key area. Been responding to that for the past week. Okay, right now, price has broken the Fibonacci level of 38.2. Okay, it's currently below the Fibonacci level of 338.2 and has touched our support point from last week of 154.49. Has a take profit alert. Okay, those on the Telegram channel, 154.49, it touched our key support level. A break below that and price could head to 153.93, a break below 153.40, and below that, scalping or intraday positions to 153.00, and then 152.68 coinciding with 61.18 level. And if the bearish pressure becomes so strong that it breaks below that level, we're looking at 152.12 and 151.30 for the USD JPY. For the USD JPY, yes. Now, that's the USD JPY. Let's look at the GBP JPY. Let's look at the GBP JPY. There you go. What do we see on this guy? We talked about the fundamentals on this. Look at fundamentals majorly from the major pairs, GBP USD and USD JPY for correlations, also from technicals. But on the weekly chart, we can spot a nice heads and shoulders pattern here. Head, left shoulder, right shoulder. And we can see price move nicely along an ascending channel. Okay, price has touched the upper border of the ascending channel right now. And it's most likely that the next target level could be the descending, um, the support border of the GBP JPY. Now on the daily chart, what do we see? Yeah, we see price currently moving within a flag pattern. If you follow the pink lines, this is a flag pattern. Okay, I like to draw my halfway points on channels that have very wide ranges, especially on the daily chart. So price currently is below the halfway point, okay, of the flag pattern. If it happens to go up, let's look at target levels. If it heads up, some target levels to look at um, are, there you go. If it breaks above 194.32, we're looking at 195.50 pivot point level and also 196.40. And um, above that, there could be a pivot there too. Okay, there isn't. Above that, yes, we could have. There you go. Price head to 198.02 and beyond that, possibly to the resistance border, maybe 198.95, 5 pips before the psychological level, and then finally to the resistance border, okay, of the flag pattern. If it happens to head down, okay, if it happens to head down, a break of 192.21 could see price head to 191.91 and then 190.16. And if it heads, it breaks the flag pattern and continues its bearish momentum. Let's see if we have any chance, right? Okay, if it continues its bearish momentum, yeah, I want to see price head to a break of 1906.16. Could see price go as low as 189.36. 189.36. And beyond that, we have the level of 188.15. Okay. And of course, if we happen to have very strong bearish momentum below that, we could see 184.02. Okay. We see 184.02 or 180.27. Of course, because there are no major fundamentals coming from the yen, we're not expecting major movement as far as 180.27, but we expect key areas between 198.02 and 185.15, okay, because of the core PCE price index to be released on Friday, which could impact the GBP USD. Now, to round this up, okay, in the shorter term and for lower time frames, for intraday traders and scalpers in the house, price is currently showing negative divergence, okay, on the GBP JPY. If you connect the lows, it looks like an uptrend. If you connect the RSI, it looks like a downtrend. Also on the 1 hour chart, you see price move nicely along an ascending channel. So for me, the ascending channel will be the key area where a break of the ascending channel, the support border of the ascending channel, would see price head to support levels discussed right here using the flag pattern as a reference, and a break above it would see price head to resistance levels earlier discussed. So for the USD yen and the GBP JPY, because of the general outlook of the USD JPY, I am strongly bearish. I favor sell positions on these two pairs, but it doesn't mean that I won't do bullish positions. So I guess that's it for our analysis for today. Um, nice pairs to trade today. Take advantage of the opportunities therein. Of course, Trump is president now. We must um, get used to some Trump volatility. So pay attention to that. There's some good opportunities in the market. If you've been on our training, you know to use the tug of war principle to capture your profits early enough. Be conservative with your positions using considering Trump volatility. So that's it for today and for this week. I'll see you again next week for our continuous weekly outlook. As always, I'm Atomashi Daniel, Vestrado's market analyst. I'll see you next week. Bye bye.